Folks, another gold major has reported, and guess what? Another gold major has failed to meet analyst expectations. It's been a bit of a rough quarter for senior gold producers here in Q3 of 2024, and it appears that Barrick Gold didn't want to be an exception to that rule after failing to hit analyst consensus on both revenue and earnings per share. I guess not all quarters can be great despite a massively rising gold price environment, right? Folks, we're talking earnings, we're talking Barrick Gold, we're talking Q3 2024 earnings season. Let's dive in. Okay guys, so let's start off with the high level. Barrick Gold for the third quarter reported top line revenue of $3.4 billion, which was an 18% improvement year over year from $2.9 billion last year, and a 7% improvement over the $3.2 billion reported in Q2. The figure, however, fell far short of the $3.42 billion that was the consensus estimate. This revenue was off the back of declining gold production, producing 943,000 ounces in the third quarter, which was down 0.5% from the 948,000 ounces that they produced in the second quarter, and down 9% on a year-over-year basis from the 1.04 million ounces they produced in the same period last year. And while production was down, costs were up despite Barrick claiming that they exercised cost discipline during the quarter. All-in sustaining costs, or AISC per ounce, grew to $1,507, increasing 0.5% from $1,498 as of the second quarter, and by 20% on a year-over-year basis from $1,255. Barrick opted to not provide a reason for the dramatic year-over-year climb in costing, despite the figure being well outside the forecasted all-in sustaining cost guidance range of $1,320 to $1,420 an ounce. A rising gold price, however, masks these issues, with the average realized price rising to $2,494 an ounce in Q3, a 29% improvement year-over-year and a 6% sequential increase. More on that later. On the copper side of things, production improved from 43,000 tons in the second quarter to 48,000 tons in the third quarter, a 12% sequential improvement. However, production was still down 6% on a year-over-year basis. Barrick, of course, only highlighted the sequential improvements. Costing here was also an issue, with costs increasing 11% year over year from $3.23 per pound to $3.57 per pound. However, they declined 3% from the second quarter's figure of $3.67 per pound. Realized copper prices for the quarter came in at $4.27 a pound, a 13% improvement from the Q3 2023, but a decline of 6% sequentially. And despite the poor production performance, the rising cost of gold helped provide a massive boost to net earnings, which jumped 31% from $368 million last year to $483 million this year, resulting in earnings per share of 28 cents versus the prior 21 cents. Adjusted net earnings also substantially improved, going from $418 million to $529, with adjusted EPS coming in at 30 cents a share. EPS, however, still came short of the consensus estimates, which sat at 31 cents per share. Attributable EBITDA improved as well, climbing a modest 21% from just over $1 billion to $1.3 billion year over year. Net cash provided by operating activities was less dramatic in its increase, moving up from 4.7% or $1.1 billion to $1.2 billion, while free cash flow moved from $359 million to $444. On the balance sheet side of things, cash and cash equivalents improved to $4.2 billion as of September 30th. An improvement from $4 billion as of the end of the second quarter, while debt net of cash declined from $688 million to $500 million, falling 27% sequentially. In terms of returns to shareholders, the quarter saw Barrick repurchase 4.7 million shares at a cost of $95 million, while delivering a dividend of 10 cents per share to investors. Okay, now that that's out of the way, let's look at the guidance. And Lord, help me here, because I feel like I'm taking crazy pills when I look at this guidance. Either Barrick is going to have one hell of a fourth quarter, or their guidance is shot to shit. I'll let you decide. Where to begin? Apologies to my editors here, because this is going to be a bit of a mess, just like Barrick's guidance. Let's start with the gold operations. Guidance is currently calling for gold production of 3.9 to 4.3 million ounces for 2024. Year to date, they produced 2.8 million ounces. This implies that to meet the low end of guidance, they need to produce nearly 1.1 million ounces in the fourth quarter. Year to date, they produced 948,000 ounces in their best quarter, which was Q2. And then there is costing. Barrick uses three metrics for costing. First is cost of sales, which is estimated to be between $1,320 and $1,420 per gold ounce. Q1 came in at $1,425. Q2 came in at $1,441. Q3 came in at $1,472. So we can kind of see how that guidance doesn't really make a whole lot of sense. Second is total cash costs, which is estimated to be in a range of $940 to $1,020 an ounce. Q1 came in at $1,051. Q2 came in at $1,059. Q3 came in at $1,104. Again, doesn't really make a whole lot of sense to me. Third is all-in sustaining costs, or AISC, which is said to be in a range of $1,320 to $1,420. Q1 came in at $1,474. Q2 came in at $1,498. Q3 came in at $1,507. I'm starting to notice a pattern here. So yeah, those targets probably ain't gonna be hit. Maybe the copper side of the operations is doing better. Production here is forecasted to be between 180 and 210,000 ounces for 2024. Year to date, they produced 131,000 tons, which means they need to produce 49,000 tons in Q4 to hit the low end of their guidance. In Q3, they had their best quarter year to date for copper production at 48,000 tons. So I guess that they have a shot at hitting this target. On the costing side of things, they again used three metrics. First is cost of sales, which is forecasted to be between $264 and $295 a pound. Q1 came in at $320, Q2 came in at $305, and Q3 came in at $323. Next up is C1 cash costs, which is targeted to be between $2 and $230 a pound. Q1 came in at $240, Q2 came in at $218, and Q3 came in at $249. So at least I guess they hit the target in one single quarter for a change. And finally, we've got all-in sustaining costs for copper, which they are guiding to between $310 and $340 a pound. Q1 came in at $359, Q2 came in at $367, and Q3 came in at $357. Barrick's guidance almost kind of reminds me of a friend that I had in high school that was always chasing tens, and he himself was like a 3, and then he'd, look at a girl who was like a 5 and then talk about how disgusting she was. Basically, my old pal Elvic, and I feel like Barrick is using Elvic's scale for doing their guidance, but what do I know? I'm no genius. Anyways, either Q4 is going to have to be one hell of a quarter, or Barrick's guidance is absolutely fucked. Barrick claims that its production and cost guidance is within reach on the back of the strong performance anticipated in Q4. Color me skeptical. Okay guys, this video is getting a bit long in the tooth, so let's just briefly touch on the operational update provided by the company. Barrick has said that they're on track for a materially improved Q4, which is expected to be a result of the continued ramp up of the Pueblo Viejo plant expansion, more throughput at their Nevada gold operations, and higher grades at the Cabaldi mine. The Pueblo Viejo expansion, once fully ramped up, is expected to deliver 800,000 ounces of gold production a year to Barrick, with the mine life extended beyond 2040. Recovery rates are expected to hit 80% by year-end, growing to 90% by 2027. Feasibility studies, meanwhile, are slated to be released by year-end for the Lumwana Super Pit expansion project and the Reko Diq copper gold project, which are expected to replace mineral reserves that were depleted in 2024. Okay, so let's wrap it up before this video gets any longer. Barrick had an okay-ish quarter. Yeah, they failed to hit analyst estimates and the production numbers were kind of meh, but we've said it before and we'll say it again. A rising gold price environment masks all issues. Despite flat production, net earnings grew substantially year over year, as did free cash flow, meaning the company is still able to provide healthy returns to investors in the form of both dividends and share buybacks. So, was it really all that bad? I don't know. But big picture, if we just take a big step back here and think about it, it's kind of hard to be bullish about a company who today has a lower share price than they had on January 1st of 2000. Now, let's just take that same date, and of course, I'm having fun with arbitrary endpoints here, but since January 1st of 2000, the price of gold is up 621%, and the price of Barrick is down 18%. Now, look, I want to tell you all that we've got a big gold bull market ahead of us. We're in the middle of the catch-up trade, And you want to own the biggest, most liquid names because that's where portfolio managers are going to start to look to put their money. But I also got to say, I look at this guidance and it's really hard for me to be bullish on this company. And I really hope that I can make a new video next quarter where I can say I put my foot in my mouth massively because the company proved me wrong. But look, like I said, we're in the middle of a catch-up trade here. You're probably going to do fine owning Barrick or any of the big liquid guys. But when I look back at the last 25 years and how the company has failed to perform pretty much at all, let alone versus a massive rising gold price, I can't help but tell you that it's probably not going to be the name that you want to own. All right, everybody, thank you for watching. If you enjoyed this video, please smash that like button, subscribe, and ring that notification bell. Guys, also let us know what you think in the comment section. What other names do you want us to cover? What do you think of these videos? What would you like us to get into in these earnings videos? I appreciate anybody who made it to the end of this video. Thanks for watching, everybody.